You're staring at a suspended driver's license, wanting nothing more than to get back on the road. But you have a specific problem. You don't actually own a car to insure. You need to find the most affordable path to reinstatement. However, navigating the high-risk insurance market without a vehicle of your own is a process filled with hidden traps. The state requires you to prove financial responsibility through an SR-22 filing before they will legally recognize your right to drive again. Many drivers confuse the SR-22 with the insurance policy itself. In reality, the SR-22 is a legal certificate that your insurer files with the DMV to verify you carry the required liability limits. To meet this requirement without a vehicle, you have to purchase a specialized product known as non-owner SR-22 insurance. This policy allows you to satisfy state minimum coverage requirements without having to register or insure a physical vehicle in your name. The qualifications for this coverage are extremely narrow. Purchasing this policy while failing to meet those specific criteria results in a compliance violation that can void your filing. This makes the non-owner SR-22 a specialized compliance tool. It exists to solve a legal mandate rather than providing the broad protections found in a standard auto policy. This eligibility map shows DMV criteria. First, do you own a car? If yes, you need a standard owner policy. Second, do you live with a car owner? If yes, you must join their policy. The ideal candidate uses transit or outside rentals. Using this policy while regularly driving a car kept at your residence will likely lead to a denied claim in an accident. Using a non-owner policy as a workaround for a household car is a compliance violation. It puts your license and your finances at risk. Consider what happens when an eligible non-owner driver gets behind the wheel of a borrowed car and causes a minor accident. This quadrant chart illustrates the policy limits. Non-owner SR-22 coverage is strictly a secondary, liability-only product. In an at-fault accident, it pays for the other driver's medical and property damage. However, it provides absolutely no collision coverage for the car you are driving. If you damage a friend's car or a rental, you will be personally responsible for every dollar of those repair costs. For low-cost legal compliance, you assume the full financial risk for the vehicle you drive. Drivers accept this risk because it's often the only way to afford high-risk insurance. This bar chart shows the impact on your wallet. A non-owner policy reduces your monthly premiums by roughly 50% compared to an owner policy. While the national average is $84, costs vary significantly. Different carriers charge anywhere from $43 to over $200 for identical coverage. With prices differing by 200%, you must compare quotes from multiple specialized carriers. However, these savings depend on one critical factor. You cannot let your coverage lapse for even a single day. If you miss a payment, your insurer must notify the DMV with an SR-26 cancellation notice. That cancellation filing triggers an immediate license resuspension from the state, effectively locking you out of your legal right to drive your vehicle. It also has a long-term consequence. The state's mandatory 3 to 5 year filing period resets to day 1. This policy's financial benefit is only realized if you maintain continuous, unbroken coverage for the entire duration. Use this summary table to evaluate your situation and decide if this is the right strategy for you. You are an ideal match if you have no vehicles in your household and strictly need to satisfy a legal requirement to avoid a coverage gap. You should avoid this policy if you have access to a family member's car or if you plan to buy your own vehicle in the near future. Always check your state's specific liability requirements, as some regions demand significantly higher limits than the national average. In Florida, for example, a DUI requires an FR-44 filing. This mandates coverage limits that are much higher than a standard SR-22. To secure the best rate, avoid generic quote engines. Instead, contact at least 3 carriers that specialize in high-risk or non-standard insurance. Once you purchase the policy, enable auto pay immediately. It is the most effective way to protect yourself from a lapse and a mandatory clock reset. For most drivers without a car, a non-owner SR-22 offers the lowest possible monthly cost to stay legal, provided you maintain perfect compliance.